If you trade crypto long enough, you'll eventually watch a brutal candle nuke through everyone's stop, only to snap back and sprint in the opposite direction without you. That kind of move is often driven by liquidations, traders getting forced out of their positions, not calmly choosing to close them. The problem is, most charts don't show you where that panic is actually happening, or when it's strong enough to flip the trend. The Liquidation Reversal Signals AlgoAlpha indicator was built to solve exactly that. It combines a statistical read of volume spikes with a Supertrend-style trend tracker so you can see where liquidations hit and when a real reversal is likely forming instead of guessing. You can run this on any market in any time frame that has volume. For this walkthrough, I'm going to use BTCUSD on the 1-hour time frame on TradingView. If you don't have a TradingView account yet and you want to follow along with the same setup, there's a link in the description you can use to sign up. Once you're logged in, open BTCUSD, set the time frame to 1 hour, click Indicators, search for Liquidation Reversal Signals AlgoAlpha, and add it to your chart. When it loads, you'll see 3 main visual elements. First are the liquidation dots or circles that appear around the candles. Circles above candles mark potential short liquidations, shorts getting squeezed out as price spikes up. Circles below candles mark long liquidations, longs getting forced out as price flushes down. The brightness of the circle reflects how extreme that spike was relative to recent history. Bigger deviations show up more clearly. Second, you'll notice a Supertrend-style band wrapping around the price. When the trend is bullish, the band sits under price and is shaded green. When the trend flips bearish, the band hops above price and turns red. That shaded region shows you which side is currently in control and gives you a clear visual of regime shifts rather than just staring at raw candles. Third, you'll see confirmation markers when a liquidation spike and a super trend flip line up. After a strong liquidation dot prints, if the super trend flip later happens within a short window, the indicator plots an arrow at the flip and shifts the band color. That combo, liquidation plus trend change, is the heart of the tool. It's saying not only did we just liquidate a bunch of traders, but the higher time frame trend has now turned against them. Those are the spots that often mark the end of a leg and the start of a fresh move the other way. Under the hood, the indicator isn't just counting big candles. It runs a z-score on up and down volume to find statistically unusual bursts of buying or selling. In plain English, it looks at a rolling window of bars on a lower time frame, measures what normal volume looks like, and then asks, how many standard deviations away was this latest burst? When that z-score pushes beyond your chosen threshold, the script flags a liquidation spike, unusually strong buying into a bearish trend, or unusually strong selling into a bullish trend. Those spikes are then mapped back to your main chart and watched to see if a super trend regime change follows soon after. Let's set this up properly using the inputs described on the script page. Step 1 is lower time frame. The indicator looks at a lower time frame to calculate the z-score of volume. By default, it uses something like 15 minutes, which is a good middle ground for a 1-hour chart. Granular enough to catch real liquidations, but not so low that you drown in noise. You can pick a different lower time frame if you want more or less precision, but going too low will make the volume stream very noisy. Next is z-score length. This controls how many past bars the script uses to define normal volume behavior. A longer length smooths things out and only flags truly huge deviations. A shorter length reacts faster, but can fire more often. For 1-hour BTC with a 15-minute lower time frame, you might keep it near the default as a starting point, then adjust after you've watched a few weeks of signals. Then you have the z-score threshold. This is the bar you set for what counts as extreme. A higher threshold means only the most violent liquidation spikes get marked. A lower threshold will catch smaller squeezes and washouts too. If you're a swing trader who only cares about major extremes, you can nudge this higher. If you're more active and want to track smaller liquidity events, bring it down slightly. Another key input is timeout bars. This tells the indicator how long a liquidation spike remains valid for a reversal signal. After it marks a spike, it waits for the super trend to flip. If the flip happens within the timeout window, say between 20 to 50 bars on your chart, it counts as a confirmed liquidation-driven reversal and plots the arrow. If the flip happens much later, the spike is treated as old news. Shorter timeouts favor fast V-shaped reversals. Longer ones are better for slower, grinding turns. Those are the settings that really matter. You'll also have the usual visual controls in the Style tab, toggles to show or hide the circles, arrows, and cloud fills, color pickers for bullish and bearish bands, and formatting options for the candle coloring. Leave them on while you learn the tool so you can see the full story, where liquidations fired, where the trend flipped, and how the fill changes as price follows through. On some tickers, you might also see a huge red no volume label across the chart. That's a built-in safety feature to warn you when there isn't proper volume data, so you don't read a random uptick on an illiquid asset as a real liquidation event. Now, how do we actually trade with this? A simple way is to treat the liquidations as step 1 and the super trend flip as step 2. For a long setup, you're looking for a washout of longs followed by a bullish trend change. On BTCUSD 1 hour, that looks like this. Price has been in a downtrend with a red super trend band sitting above the candles. Then you get a strong long side liquidation, a bright circle under the candle, which is usually on a sharp spike down. That means late longs are getting blown out, and on its own, that's just panic. What you want next is the confirmation. The super trend flips from red to green within your timeout window, and an arrow appears near the flip. That says we've squeezed out the weak longs, and now the trend engine has turned up. Those are the spots that often mark the end of a leg and the start of a fresh move the other way. At that point, you can look to enter on the first clean pullback after the flip. Let the initial reversal candle close, then wait for price to test the new green band or a nearby structure level that lines up with it. You want to see a higher low form above that band or a bullish candle that rejects a quick dip into the cloud. Your stop loss naturally fits just below the liquidation low or just under the opposite side of the green band. For a take profit, a simple approach is to target a 1.5R move or aim for the next obvious resistance level on the left of the chart. If price keeps running and the super trend stays green, you can trail a portion of the position along the band. For a short setup, you reverse the story. Price is in a sustained uptrend with a green super trend band below the candles, then a sharp upside spike hits and the indicator prints a bright circle above the candle, a potential short liquidation. That's where late shorts are getting squeezed out and forced to buy back at the worst possible spot. You don't jump in front of that spike, you wait. If the super trend flips from green to red within the timeout window and an arrow prints, that's your cue that we've moved from short squeeze into actual downtrend. Now you work the first pullback into the red band or a prior support level that's now acting as resistance. You want a lower high and a bearish rejection candle. Your stop goes above the liquidation high or the top of the red cloud, and you again aim for at least 1.5R or the next clear support zone. If price keeps running and the super trend stays green, you can trail a portion of the position along the band. A quick word on expectations. Liquidation reversal signals is designed to reduce false positives, not to magically remove them. It filters out random trend flips by demanding both a statistical outlier in volume and a structural change in the supertrend. That's a big edge, but it doesn't override everything else on the chart. You still need to respect major higher time frame support and resistance, news events, and overall market conditions. If a confirmed bearish reversal signal shows up right into a huge weekly demand zone, that's still a tricky short. Use the tool as a way to spot where the biggest battles were fought, not as a one-button trading system. As always, this is not financial advice. Everything we've covered is for education only. Build a complete plan around your own risk tolerance, test this indicator on historical data, forward test with small size, and double-check your thesis before you take any live trade. If you got value from this breakdown of liquidation reversal signals, take a moment to leave a like. And if you want to see more deep dives into advanced indicators and how to actually trade them step by step, consider subscribing so you don't miss the next video. Thanks for watching. See you next time.